Hello. I'm going to share my strategy I'm currently testing. I use Mark Chapman's stop hunts in a specific way. So I'm trading off the monthly candle each month, and I'm finding that the monthly candle is a lot easier to manage than, say, the 4 hour, anything down from there. I still use the 15 minute to do my trade execution, but the analysis always begins with the monthly candle. And why the monthly candle? Because it's less prone to what you find in the lower time frames. A lot of the choppiness that you get in the markets, whipsawing, things like that. So by starting with the monthly candle, we can work in a more relaxed environment. So once a month, new candle forms. We're just waiting to see what happens to it. So let's just give you a demonstration of what how a candle forms before we go into the actual bulk of it. So if we start by looking at the open, if this was the previous candle, so here's the close of the previous candle. So I type close. From there, price is going to go one of two ways. So it's either going to go up or it's going to go down. So candles always follow this pattern 9 times out of 10. Price will either start to go down like this, and what you'll see is once it hits this point, let's say it could go down to here. We're in phase one of the candle formation. Now, as price starts to return, as it turns around, the candle starts to get thinner and thinner and thinner and thinner till you end up with a wick at the bottom. So at the moment, it would look like the correct term for this is a low test bar. But if we was on the monthly candle, this would take potentially a whole week to form this structure. After that, what you'll see is the candle will, let me get rid of that, switch in directions. So at the moment, this might look like a red candle. What am I doing? Get rid of that. Just put the wick up to the close a minute. So bear with me. It's not the greatest of concepts. This. All right. So here is as the price carries on going up, we're now into phase two. So we could be heading towards the middle of the month, and price keeps going up and up and up and up and up and up. And you might, let's say, get that high, and eventually, what will happen is it'll start to come down a little bit. So we're moving into phase three at this point. But what you have at the top is the wick at the other side. So that tends to be how the candles form. 9 times out of 10, that's how the candles form. So what you'll see is let me just put the close here. This would be the the close of the bar. So this becomes the open, and then this just becomes close. So this is now the close. That's the close of the previous month, and this bit here is the open of the new bar. Okay, so this is the low, and this is the high. So initially, as the bar started to form, it would have gone down, turned around, decided to come back up. Oh, again, come back up. At that point, we're now green, and price would have continued to go up and come back down. And this is the what you would see in the lower time frames. So what we're interested in doing is trying to find those areas as we zoom into the lower time frames where we get a sense that price is going to reverse into the opposite direction. And what's key to this is knowing where you are in the month. So if we're at the beginning of the month, we're looking for the phase one cycle. And so somewhere around here, we would be looking for that level, and the strategy. We'll talk about that in a minute. The formation of where we are. The checklist, that is. So what we're looking for here is that pattern. So there'll be a level around here and a level around here. So beginning of the month, we're looking for a level around this area, and at the end, kind of the tail end of the month, we're looking for a level at the top. So there's potential here to get in twice on the same asset class. Doesn't always happen, but we're looking for something which is a nice clean entry. Sometimes you won't see the entry, but actually it becomes one of the best trades of the month, but you didn't get in. But it's better to stick with something that you can see, and just accept that we're not going to get every trade every single time, and not cut ourselves up about that kind of stuff. So let's go and have a look at what the strategy looks like. So I'll bring it up to the window. So this is my strategy that I've been testing for a few months now. And all this uses all the principles that Mark talks about in his material. Initially, the stop hunt stuff. I've added some extra context around those areas of stop hunts, specifically for my confluence, as I say. I'm looking for levels and the stop hunts, but I like to have a little bit extra information just to confirm it. Otherwise, if I go in for everyone, I just find that it's very difficult to gauge or get it right every time. So I'm quite picky, let's say, because we only want to go for the best trades rather than, okay, we see a stop hunt, let's just get in. Because as I'll show you in a minute, sometimes these can create a couple of stop hunts, and you put your stops in areas where the manipulation hasn't finished. So we have to be extremely careful in what we're doing. So it comes with time, and I'm finding I'm getting better and better at this now. So at the beginning of the month, we want to sit and wait. Day one of the month, there tends to be quite a lot of randomness, choppiness around this area, and we have to wait for that kind of noise to get out of the way. And as so, I'm focused on a bullish candle here, but it's just if you see the reverse, everything's in reverse. We're looking for price to come down to an area where we get a sense that it's going to move back up to the entry of that candle on the month, that is, and that's what this is the phase one of the candle. And then so we're looking for this level here, and what we'll see to the bottom right is that you'll be able to draw that level, and then we're looking for little bits more snippets of information. So I've got this convergence pattern here, and what you'll find on the reverse of this, as in a bearish maneuver, you get the divergence pattern. I'll go into more detail on this in a minute, but that's what we're looking for essentially. We're looking for the stop hunt, so we're looking for the level, the stop hunts, the divergence or convergence pattern, and price action at that point. So over here, I've classified what the criteria is for taking a trade, and this is the checklist that I create. So first of all, identify the monthly candle phase. Down here we will be in a phase 1, and so we're looking for that entry. If we're in the middle, all we're doing at this point is managing that trade that we've taken down here. And then once we get up to the phase 3, we're then kind of looking for the reverse to happen, getting out of this trade and then going in the opposite direction. I've been quite profitable in this area over the last couple of months. I had some great success in that area. The beginning of the candle always tends to be a little bit more difficult to actually find the pattern, that is. So identify the candle phase. Then you're waiting for that level and structure to appear. And in that level and structure, you will start to see the liquidity, which highlights where all the stops are placed right now. And then we're waiting for the entry cheese to appear and the stop hunt. We will see volumes start to increase around this area. So there's quite a lot of activity going off. People's stops are being fired. They come into the markets. You've got breakout traders, retracement traders, rebound traders, all having a go at this area. And then the type of pattern we're looking for in that stop hunt is potentially a W pattern for the bullish area and of a phase 1, and the M pattern for the bearish area of the phase 3 of the bearish candle, that is. So everything would be in reverse for the other candle, the bearish candle. Then we're looking for some form of price action. This could potentially be an engulfing bar. I'm saying get in here. This would be an aggressive move. You can still wait and getting a later date. Sometimes you will see what becomes a bearish trap or a bullish trap. I think you've got a bear trap or bull trap. So that's what I've said here. Be wary of bear traps in these areas. And I can give you a great example of one of those in a minute. So place your stops around the stop hunts at the bottom of the stop hunt for a bullish move, and the top of a stop hunt for the bearish move. And that's essentially it, really. That's all. That's as far as I take it. I like to see a clean pattern, but not always 100% clean. If I don't see it, if it's not ticking all the boxes, then I tend to just ignore it. Sometimes they come out to be the best trades, and I can show you one of those in a minute. So day 1, we see randomness. Phase 1 will start to form around days 2 to 5, maybe even longer than that. Phase 2, we can, this is the bulk of the candle. So once we're in that trade, manage your trade, move your stops closer as it goes through all that structure between days 6 and 20. And then around day 20, we should be looking at trying to get out of that first trade. And we're waiting for that level to appear on the other side of the candle. So between days 20 and 30, we could close the original trade and get in on the retracement. And obviously close that trade towards the end of the month. All right, let's move over to the trade window now, and let's have a look, see what we've got up. So I've got the dollar yen open at the moment. At the beginning of the month, the dollar yen opened on a previous bullish candle. So if we just go up to the 1 hour second, so that's the it closed on a high. So the original opening would have been around here, and you can see that it dropped, come back down, dropped again. So we could have said that this was the entry point around this area, and down around here, then it reversed and come back. So it wasn't particularly clear at that point, but you get the gist of it. So we have this was the beginning of this month. Lots of choppiness around the area. It was very difficult to get in. Didn't really see it, to be honest, but if we zoomed in, we're looking for the divergence pattern. It's not particularly evident, so I wouldn't have got into that probably. Well, I didn't anyway. I didn't see it. But now we're into, where are we? We're on to the 18th. Now this one was quite early. We started to see this level up here, and I was Saturday today, the 18th. I was before I went to work yesterday. The price was around this level here, and it was starting to. It was about 7 o'clock. It was around about this point, and I drew the levels. I saw where the equity was. I could clearly see the stop hunt down here. If I just zoom in a second, I'm in the 15-minute. So this is where I do my looking for the execution. So you can see the equity appearing in the arrows on both sides. So where we see equity down here, people are placing their stops, and these would have been buys originally. So those stops are sells, and this would have, as price punched through this level, those sells would have triggered, and this is what this is what pushed price even further down. But it started to turn, and here is that W pattern, and we would have some retracement traders at this point come in, and we'd had breakout traders here as well, which would have shown the activity. So you can clearly see that down the bottom where volume started to increase around this area, but we didn't get the convergence pattern on this particular stop on, and that was the key thing for me, was that you need to see it, that pattern, and it wasn't there. So what happened? Price came back into this area, and more equity started to appear. That stops it's hitting this area. We could have potentially got in at that point, put the stop below this area, and price kept bouncing, come out and tested this area, and this is where we get the W pattern appear, and we have the convergence pattern with also volume increasing around the area. Came back out, started testing this area. So I didn't have my eyeballs on this at the time. I missed all this opportunity, but we could have got in at any point around this area, put our stop below there, and wait for the price to go up. So what happened? Price came up to this area again. I'm actually missing an arrow here because we could potentially put an arrow here. So traders would have seen an opportunity, as in here's a strong level at this point, and what's happening? People are traders are placing trades in the opposite direction. They want to go short, so there's going to be stops around this area, and those stops are actually buys. So I saw this, and basically this is where I got in around this particular area. I put in a long position. Price actually came down to here, but when you look at this specific area, I put my stop just under here. If I just zoom in a second. So what's nice about this area, it came back and touched this level, but what have we got? We got a nice engulfing bar just by here. And the same, again, another engulfing bar, which has pushed price up to this area. And this, to me, looks like a bull trap. It's actually triggered those. It's come back down. It's floating around this area, but what can we see? Price can't keep to its lows. So I'm pretty confident. This was getting towards the tail end of Friday evening now. I could have closed that area, but you know what? Where are we in the month? We're coming towards the tail end of the month. Bring up the diagram again. Find the right one. We're coming towards the end of phase 2. And we're now we're around about this area, so we're looking for the wick formation. So we're quite early into this at the moment. We're looking for that wick formation. Where are we? So we're kind of around this area at the moment, and we've seen the levels. We've seen all the indications to get in at that point. So we could see quite a reversal on this pattern. So if I just zoom out, if you'll let me. Where are we right now? We could see potentially price come up all the way back up, potentially. I don't know. Just be interested to see what happens with that. We might see some level. So I'll be managing that. We've got at least 12 days, 2 weeks almost left of the month, and I'm just going to manage that trade for the rest of the month. The other trade that I'm currently in is the pound Aussie. Now this, where I've circled, is the stop hunts that I saw. And I'm just going to pause a minute. So if I just zoom in, what are we on? The hour at the moment. So at the beginning of the month, I didn't see the pattern, so I missed it. I missed getting in at this end. What scared me a little bit was the gap that we had here. This happened over a weekend, and whenever I see those gaps, it just scares the shit out of me a little bit, because I can't see the structure. I don't know what's going on there. So I kind of ignored this area, and there wasn't really any kind of structure to the left either. When you zoomed in, you can't see anything at all. But if we drop into the 15-minute, zoom up to this area, potentially, if you were brave, you could have placed a level around this area. Let's see when does that, and found a really profitable stop on area to get in. So I just zoom out. So where did I get in? Well, where I've circled here was the where I eventually got back in to that trade. I've not drawn it, but I'll draw it now so you can see it. So I saw quite a few opportunities. There was an area around this area. If I put my lines in, you can see this is how you form your divergence pattern. So you want to see, I've got another video on this, but you want to see the blue line on the RSI come above this dotted line, and you always draw the line on the peaks. I mean, you can. It's not a rule of thumb, but you can go through the peaks with the line when you're trying to find that divergence pattern on this particular one, because this is a short. When we look at the, just zoom out again, when you look at the previous month bar, that was this was the open, and it carried on going up. So we were looking on the phase one for an entry in short at that point. So this is the pound Aussie. So there was one potential, but I just didn't like that because it wasn't going above. We didn't have the confluence of the stop hunt at that point. So I saw lots of equity appearing, and that just wasn't going above. So again, back to the checklist, and this is the key. You want to see all of those checkpoints. It could come in, don't necessarily have to come in the same order, but generally they come in that order. So it's important that you follow those rules. Not all stops are equal, and I'll show you a good example of that in a second. So you could see the equity coming up. You could see equity down here as well. Lots and lots of it. But it was this one that caught my eye. This is what I saw. So if I draw in the divergence, you can clearly see really strong upwards. And there's the down. So you can see the divergence. Couldn't really see the M within here, but that you know, I'm happy. That was a nice entry. So you know, for 4B, M pattern, double top, and divergence, you could potentially drop into, let's say, the 5 minute, and you might have seen it there. Oh, just push that by accident. So if I was to zoom, so it's sort of an M pattern, but it was very up and down at that point. So where was we? I got in around this area, and I'm still in at the moment. The other thing to be wary of is always, and it's a nice sign, is the bull and bear traps. So there is a bear trap here, which I will point out in a minute. Let's go in. So we have, look at that, nice engulfing bar there, and then there's another one. Loads of engulfing patterns. There's a nice engulfing bar, and there's one there. Loads of areas where it's testing this. Loads of engulfing bars. Could have got in at any of those points. Put your stop above that bar, and look, engulfing bar. Testing this area, lots of liquidity in that area. But then look at this, that particular bar there shot up, come back down, taking out any stops in this area. It's a nice stop hunt. So there was a new level for me. But that's a bull trap. This is where I am at the moment. So that's this is my my other account. I am in on that trade at the moment. Not entirely sure how many pips I'm up. Not a great amount, but yeah, about 140 pips at the moment. So let's zoom out and see where we are. Okay. So there's we're only just going into phase 2 of this candle, which is the crazy thing about it. And we want to see some push down into this area. So phase 3 might be quite short-lived. It doesn't mean to say that I'm right every time, just following the rules of the strategy. So that's the pound Aussie. The other one I wanted to show you very quickly was the euro pound. So this was a particular trade that I was working with one of the other guys in the group, Mr. Foster himself. So at the beginning of the month, where was we? I couldn't see any levels appearing, and then all of a sudden we had this huge drop going down, and then we had our convergence, which was, it was there, it's really nice, but no real level. So I missed this opportunity. I know Paul took it. I didn't get in because I just didn't like it. But look where it is now. Have you gone in around this, let's say this area? Because that was like a flag. It could be the thing you do. We stayed in that trade. Around here. 300 pips. Insane. So that's it. That's the strategy. I'm liking the monthly candle strategy, only because it's relaxing, and you can still execute your trades off the 15-minute. Everyone seems to like to go down into those things. They're digging for the patterns, but it's just that extra confluence that you get from this strategy. I just feel more relaxed. And always remember, not all stop hunts levels can be treated equally. It can come back into this area quite easily. That's why I'm going to advocate everyone who wants to use this or try it out. You have to see all these things. You want to see, although I missed that one, I'm fine. You want to see a nice, obvious, let me jump into 15-minute. Obvious structure, levels, stop hunt, convergence pattern, W pattern, coming back into that level, price action. You need all those things to happen. You want to see it all. Could have got in at any of these points. Over there, that one. That one. All of them. Even here, could have got in. Lots of opportunities. If you missed the first chance, could have tried again. And that's what you need to see. Okay.